At least 5 reasons that the housing market's going to at least be stable, if not continue to grow for the next year.
That's right. That's why you tune in to the National Real Estate Cafe. We get your daily dose of real estate and financial market updates with no ulterior motives.
That's right.
No
political
fake news.
spins, no fake news, just data and a little bit of market feel that we have. And I'll inject a little bit of that at the end here.
Well, we've been doing this for over 9 years on our radio show and now 3 years with the National Real Estate Cafe. That thing's on fire.
Yeah.
Because we watch the data and we're going to let you know what's happening. So you're going to hear, we just put on, yesterday's video was about Fannie Mae releasing that we're going to head into a market crash and the housing boom and all that stuff. And we went boo, you know, because of a couple of reports during a cyclical time, meaning October, went down, which is typical. And they're saying that's the start of the crash. Oh, affordability is down because prices are going up. And we explained to you, no, go to another video of ours and we'll explain how affordability is actually better because rates have gone down a full percent. So here's some more reasons.
All right, let's start with this one. And CoreLogic's actually one of our favorite reports. We talk crap about a lot of different people, but CoreLogic actually does a really good job of compiling the data and having a reasonable outlook and forecast. So let's talk about one of the things is the NRE and Fannie Mae and Freddie Mac and CoreLogic. Everybody, what they do is they forecast what next year is going to look like, and most of the time they suck. All the smartest minds in the world.
Well, they're predictions.
They're predictions. That's
I mean,
all it is.
like you said, CoreLogic uses real data, and we follow that data. And because of that data, they're one of the best. That's what we follow. Wait, data.
Oh, yeah. But, you know, they all have good data, but just the nature of predicting anything is always going to have some flaws. But CoreLogic has a history of doing a pretty darn good job. So let's look at the slide again.
Yeah, so this is pretty dead on. Right now, current appreciation this year. Remember, we had a very slow start to the year. So this is year over year.
Not a very slow start. The worst start. It was atrocious.
Yeah, it was really bad, meaning we had no appreciation. We had no housing market for about 4 or 5 months to start the year. So now we're on a catch-up phase. And now it's been on fire because rates came back down, thank goodness. So they're predicting because the rates are down and affordability is improved, and we have no supply, we still don't have enough homes, that they're forecasting that appreciation actually increases next year to 5.6%.
And so what we say is when you look at these predictions, if it's not 5.6%, what if it's 4.6%? Is that okay? Would you be all right with 4.6% on $500,000?
Yeah, that's over 20,000. That works.
That'd be good.
In 1 year.
All right,
Are you
so let's
saving
take,
that amount? Okay.
So that's a good reason, right?
Right.
Good reason is low interest rates, lack of supply, forecast is good.
All right, next slide here. Oops.
Next, say next.
Boom. Here we go.
There we go.
Pending home sales. Remember, look at the April and May, how low it was on this chart. And that was coming back from the very slow first quarter because interest rates went up a full percent. As rates went down, you'll see that pending home sales have increased dramatically. So you can see that September was very strong.
I know, but wait. So let's take a look at this chart and then what's going to happen. Let me just use the crystal ball again.
Yeah.
October is going to be worse.
Yep.
You know why? Because September pending home sales are August escrows. October pending home sales are September escrows, so it's going to tweak just down a little bit. And guess what's going to happen for the rest of the year? Because it has an annual cycle, if you look at the chart, if you drew a line on it, you could just basically see the seasons and the way they go.
That's right. So you will start seeing it down, and then the naysayers are going to get out. You're going to hear all kinds of the media. That's why we beat them up.
Pending sales down
Pending sales
14%.
down. Yeah, the market's tanking. Oh, wait a minute. Look at these pending sales. And remember, last year, the fourth quarter and first quarter were some of the worst numbers we've seen in years and years and years.
So let me predict that the year-over-year numbers are going to look great.
There you go.
There you go.
All right. So,
So again, housing continues to be strong. Pending home sales are good.
Initial jobless claims.
This would be the why.
This is the why. Jobs are still good. We don't have unemployment ticking up yet. So it's been very consistent. Remember, when we started our radio show 9 years ago, this was almost 500,000 jobless claims.
Yeah, so let me throw a little shout out to Barry Habib here, because one of the things that it says is if you're looking at this report has a lag factor and it's way too late. What we need to be looking at is overtime and wages. Because before you fire anybody, what you're going to do is you're going to cut overtime and you're going to reduce wages. And before you let anybody go, you're going to cut back hours, you're going to do all these other things. So when everybody's looking here, we're looking at wage reports to predict what's happening in the future.
All right, and one more great report here. Why we feel the housing market's going to stay strong.
I'm going to go look for this video because it was like probably 3 years ago now. I told Dom, and we were like this, doing a show or whatever, and I'm like, oh, market's demographically challenged. And
I heard it every time.
I know, and he looked at me like, the first time, he's like, what the hell is that, dude?
Yeah. But he's right.
Not challenged, demographically charged.
Charged. And that's because the millennials are coming. This is the largest generation ever in history, and they're coming of age to buy homes. So we have 9 million. There's, what is it, 20-something, 66 million millennials, basically, or people in the age, but basically we have 9 million millennials buyers coming into the market over the next few years.
Well, so I said that we were going to give them 5 reasons, and I think we've only gone through 4, Donna. You're out of slides?
I'm out of slides.
Perfect. So then I'm going to give you one from the street. I can't get a contractor to my house to save my life. So if you can't get someone in construction to come to your house to save your life, and your dad is a general contractor, what does that say? It's absolutely impossible to find someone in Los Angeles to do work on your home. So that tells me the economy is still very robust. People are spending money on improving their homes. Home improvement is in full swing, and that's because we don't have enough inventory. So those things drive the market. Those things create a lot of profitability. I wouldn't be surprised if we get great retail numbers this December.
I agree. So tune in tomorrow. We got some more great stuff. In fact, we're going to tell you what is the smartest thing that Jeff Bezos did with Amazon. We're going to tell you tomorrow. So tune in again tomorrow, or check us out at donandgino.com. Subscribe to our YouTube channel. Thanks for tuning in.